In Alex Hormozzi's podcast, The Game, he talks about three ways that you can grow your business. You keep doing more of what you're doing, you do what you're currently doing better, or you do something new. So you've got more, better, and new. Three ways to grow your business this year. Today, we're talking about how do you grow with the new. Most early stage businesses less than $1 million in revenue need to keep doing more and or do their thing better. But as you continue to grow and you've kind of maxed out capacity on the more or better, which is pretty rare, everybody wants to move towards new. And this is an entrepreneurial dilemma that most founders face, is that they constantly want to keep seeking for the new. And what happens is you start to think about what your gut is telling you in relation to what you think the market wants, and you continue to dive down these new holes that don't necessarily drive your core business. And you don't make decisions based on the data and what it's telling you relative to what you should be building that's new. So how can we leverage market signals? How can we leverage customer insights and historical data to uncover net new revenue streams with confidence? So many businesses expand based on gut instinct and experience rather than structured analysis. How are net new revenue streams typically identified? Typically, we see customers identifying a need and deciding to fill it. Maybe one of their customers have asked them for something specific to their use case. And then the company goes heads down trying to solve that, assuming that everybody else wants that. Conversely, it could be just following an industry trend, or maybe a competitor may have made a move and you feel like you have to go after that. Or maybe you have a team member that has specific expertise in a certain area that you feel like you really need to maximize and take advantage of in order to see their full potential in your business. An example of this could just be an accounting firm that has a lot of clients and they're struggling with forecasting. They may or may not have a higher degree of forecasting skill set in their firm, but because they're getting asked for it, they decide to launch a new advisory service based on this observed need. And that gives you some degree of demand in that situation. However, to just stand up a new service because a client or several clients are asking for it doesn't necessarily drive towards the sustainability of a new service. So gut instinct is valuable, but when you combine that with data to provide a much stronger foundation for decision making, you're setting yourself up for a higher degree of success and longevity in that new endeavor. So how do we use market signals to spot new opportunities? There's a lot of structured ways that we can think about this in order to uncover monetization opportunities. A few data sources for market listening. Customer surveys. Do you have direct feedback on needs that are going unmet within your current customer base? Are you having conversations with your prospects and with your customers on a regular basis? So what are customers or prospects asking for because they don't see it in the market? Maybe there's a solution that they believe you can solve, but they don't actually know how to get it solved. They don't know whether or not you offer it. If you start to see repetition in those types of questions that are being asked, you can start to create a hypothesis around, is there a market need here? You can also do competitor research, understand what they are starting to lean into, but you have to do that through the lens of ensuring that it's not just a trendy thing or you're just following it to try to keep up with competition. The best value here is just identifying gaps in the competitor offerings that you can fill really well. The last thing you can do is start to look at industry reports, trend analysis, to understand what are the emerging needs and demands in the industry that you're serving. So for example, a SaaS company could be analyzing prospect inquiries and find a lot of opportunity and leads for a feature that they don't currently offer. That company can then start to build a really lightweight version of it as an add-on service to see if the demand is truly there. Now, what often happens is that you see companies start to dive headlong into a new feature because a customer asked for it, and they go to the extreme to build this out in a really comprehensive manner and not just a lightweight version that can kind of check the box temporarily to test demand. As an action point, do you have a system? Do you have a way to log and analyze these signals in order to consistently take this feedback into your net new revenue opportunities in the future? what we're looking for is signal. We're trying to identify signals rather than ad hoc observations. Now, when we're looking for this signal, we're trying to validate net new via historical data, and that past data can provide insights to help you then start leaning into the new. So how do we start analyzing historical data? One, we've got to look at similar past initiatives. Have you done this in the past based on data, and how did it go? Are you still doing that thing that you leaned into based on a customer conversation you had a year ago, or data that you gathered over the course of the last 3 years and you launched last year? How is that going relative to your net new? You can break down your customers into cohorts or into segments. Are there existing customers within a specific niche of your customer base that would buy this new offering? Does this new offering serve the whole, or does it serve a segment of your customer? When you can start to model this potential revenue, you want to understand, how do we actually uncover who's likely to opt into this? Maybe you can send out a survey. Maybe you can send a teaser email to your email marketing list to say, hey, we're thinking about launching this thing. Give us some feedback. And maybe if you give us feedback, you can have early access to a free beta to get, again, that data on whether or not there is viability to this net new. When you start to model that out, you then want to layer pricing and conversion estimates on top of that to then understand whether or not this is something sustainable that you can offer into the future. So if a new manufacturing company, a new product company is starting to look at a new widget to launch, they want to look at what are the past launch data sets telling us? What are the customer demographics that we're going for here? What's the feedback that we've gotten from customers? And is there any potential seasonal demand that would impact the predicted revenue potential for this new product? We want to build some type of a projection model before we commit significant resources to a new revenue stream. Now, once we've committed to this net new, we want to test and launch this new revenue stream before full-scale implementation. So we really want to test small before validating. Like we said with the SaaS company, instead of going headlong into product development on a full-fledged new feature, let's go really light, let's validate the demand before we move into full production. So in that, we want to set measurable goals. What's the minimum customer interest level? What are the pilot revenue targets to determine whether or not it is viable? Now, oftentimes what you typically see is that companies will expand too broadly without the validation. Potentially, companies will misalign new offerings with the brand or maybe their core services that actually creates dispersion amongst their customer base because they don't actually know what direction to go, because there might be some degree of competition rather than complement to their existing products. And then lastly, you see companies just kind of ignore the financials. They will pour dollars and pour debt into net new, when in reality, you could take those dollars, put it on the existing, and make the existing better, or start to create better go-to-market rhythms to do more of what you're currently doing because something is already working. While experience and gut instinct are important, an SMB should really combine the experience and gut instinct alongside of the structured market listening and data analysis. The historical data can really help us with modeling and evaluating whether or not the potential revenue stream makes sense before committing all of the time, energy, and resources to dive into it. This testing and validation ultimately reduces your risk and improves the likelihood of success in order to move forward in the net new. But like I said at the very beginning, oftentimes more of what you're currently doing and or better of what you're currently doing is usually a better allocation of your dollars. I'd encourage you to start actually tracking that customer feedback, tracking the prospect inquiries, analyzing the past performance of similar launches that you've done, and then start to model out the financial impact of what the new revenue opportunity could be for your firm as you continue to grow and scale and build a more profitable business in 2025. Thanks for tuning in to Data Fuel. We hope today's insights help fuel your SMB's growth. Don't forget to subscribe, rate, review the podcast so we can keep bringing you more data-driven strategies. Till next time, keep fueling your business with data.